Following the imposition of Western sanctions and several months of deflation, Russia's central bank says the inflationary pressures across the economy has remained strong, citing a slump in the ruble as a factor. Russia recorded inflation of 11.8% on an annual basis in January, almost 3 times the central bank's official 4% target. Falling revenues from oil and gas sales have again hit the Russian currency this year. The ruble has fallen 16% in December when European Union embargo and G7 price cap on Russian crude sales came into force. According to analysts, exchange rate has already affected prices of the most import-dependent products in January. And if the ruble remains at its current level, this will continue to have pro-inflationary effect in the coming months. However, the Apex Bank signals to a raise in interest rates to cool inflation. Inflation shares edged up today as a U.S. holiday made of slow trading ahead of minutes of the last Federal Reserve's meeting and a reading on core inflation that could add to the risk of interest rates heading higher for longer. All this made for cautious start, and MSCI's broadest index of Asian Pacific shares outside Japan nudged up 0.7% after sliding 2.2% last week. The bounce was led by Chinese blue chips, which firmed 1.1% as Beijing kept interest rates steady as expected, having already poured liquidity into the banking system in recent days. Japan's Nikkei was flat. South Korea added 0.3%. Euro Stock 50 futures and FTSE futures both added 0.4%, extending last week's gains, while S&P 500 and Nasdaq futures barely budged. U.S. crude exports that had been boosted by trade flow reshuffled in the aftermath of Russia's invasion of Ukraine and will remain elevated this year as Europe and Asia search for supplies. Latest data from the oil and gas industry shows export of U.S. crude to Europe reached 1.69 million barrels per day in December, the highest in the last 2 years, and eased about 1.42 million barrels per day in February. Western sanctions on Russia crude and oil products have opened the door to rising demand for U.S. crude grades as many European countries have become thirsty for alternative supplies. Russian oil is expected to continue flowing into India and China, while heightened volume of U.S. crude will go to European and Asian customers. Crude oil prices rose today amid optimism over China's demand recovery. Concerns that underinvestment will crimp future oil supply, and also major producers keep output limits in place. U.S. West Texas Intermediate crude rose to sell at $76.94 with an upsurge of 0.79%. Brent crude futures also experienced an uptick of 0.98%, selling at $83.81. Bonny Light sells at $82.87 with a price decline of 2.85%. And for the OPEC basket, crude oil dealers are offering $83.76 with an upward price review of 0.98%.